Hello friends, welcome to my video and thanks for watching this video. Friends, this is what I'm thinking from past couple of weeks, and I have made couple of videos on that as well, where I'm talking about Dow Jones Index and why I'm thinking that it is still in a range and the correction will most probably be over. Indeed, it's a huge correction and it's a health crisis rather than a financial crisis. And a health crisis has multiple chain effects, not only on industry but also on the life of each and every individual across the world. That's what is happening, and it has a cascading effect on everything, almost everything. But still, what has happened in between is that there are lots and lots of money which has been printed across the globe, and it is yet to flown in, and the impact of which is yet to be seen in the market. And probably as soon as the flat has as soon as the curve has flattened out, you will see the kind of impact and the kind of stock market rise which will happen in the near future. So without further ado, first I will talk about, so you can see this is the S&P 500 monthly chart, and I will tell you what is the trend right now, and then I will also give some of my arguments that why I am thinking like this, and you'll see here. So this is the pattern, the gramophone pattern, which has uh, appeared, and we have seen a very huge correction and probably a very fast swing on the downside, which has not happened in the past yet. And I personally don't think that this is something which we can relate with the 2008 financial crisis. Obviously, the impact of this crisis will be far more deeper than the previous one, but I'm only talking in terms of stock market. So please don't make any judgment that you are so mean and those kind of things, because when we are talking on a particular subject, we have to talk about that thing rather than thinking morally, because I'm talking about something which is related to money and not related to society. I'm not saying I'm not concerned about it, but I'm talking only about the price movement, so let's keep it that way. So what I'm saying is, you have seen that there is a gramophone pattern made, and because of which you will find a swing, a very high swing, which is happening on the up and the downside as well. So this is the top range, this is the resistance area, and again if it falls down from here, so there will be consequences. This is the first case, and second case, that if this range will break in the near future, then there will be a further downside, and which will be very deep. You can see that how open or how broad is that this channel. So this channel appears on the top is indeed a very negative sign. There is no way about it. But why I am keeping my views intact, that we have to change our views uh, according to the situation. But what keeps me hanging, so there are two three things. First, let me just make the support and the resistance line. So you can see that this is the bigger trend, and this trend is from 1974. So you will see this trend is very big and very huge. Once it breaks down, then there will be another consequence, but for the time being, so if this range breaks, obviously we will see somewhere around 1400 odd levels. So the same chart you can apply on DJI. The DJI or Dow Jones Indices has the same kind of pattern. But what I'm saying here right now is this thing. So I am still thinking, and I have a strong opinion on this, that probably the stock price will touch on the higher end of the range in the near future, which is around means I have made some videos, or I have written somewhere a couple of months or probably 1 year back, that the target is near to 7,000 not. So I'm still think that that is a possibility. So my best case is that before reaching this side, it will definitely reach that side, and then we will see financial kind of collapse in the market. So this is the thing, and why I'm thinking like this is, I'll give you two three things. That firstly, this is the S&P 500 P ratio. So what you can see here, so you will see that the chart is available from 1930 to 2020. So the higher it went means it has went up to 160 odd during the financial crisis, and right now it is around in the 22. So why I am thinking that this PE is not overvalued is because you haven't seen this kind of money printing in the history of the global economy, and the kind of money printing which has happened and yet to come in the market when government is bailing out each and everything. When you're talking about individual, when you're talking about small companies, big companies, bank, you are bailing out everybody. So the money will come and it will flow across the economy, not only in US but across the world. So the impact of which is yet to be seen, and I'm very sure, and my views are very much prominent, that it will indeed create inflation in some time, and once the demand came and the price will start going higher, you will see growth, as and also you will see the PE will go much higher than the current level. And also, if you have seen this before this TMT crisis in 2012, the PE has hit above 40, and before the financial crisis it has moved above 100. So comparatively, we haven't yet reached those levels where we can say that we are in a bubble territory when I compared the past price to earnings ratio of S&P. The second thing which I will definitely talk about is the money supply. So the money supply has been crunched down. So you will see in you will see in this chart that this is M2, this is what I found, but you will see in this chart that the money supply is at least 10. It's the growth rate. You will see this is the growth rate. So you will see this is at least 10%. So what we will see here right now is only 5%. In the history where big crash or big things happen and the price fallen on the downside, you will see that the growth rate has at least hit 10% and above, and then it hasn't fallen down. And in the past, in 70s and 80s, you will see it will hit to 10 to 12%. Right now it is at 5%. So there is a strong probability with this kind of money comes in and flows into the market, you will see the entire global economy will flooded with currency, and definitely the currency will lose value on the downside once this health crisis flatten out, and the dollar will go down. That has to happen. The dollar will go down, and you will see that the because the money supply will increase, you will see the percentage will go higher. So in this case, I don't see that there is means comparatively there is a cash crunch right now, and once the money flows into the market, you will see things different things were going on. So based on those two scenarios, and this you can see on majority of the markets, take it euro as well, there I have seen the M3 growth rate, and it has the same thing, that it has not yet reached to the peak of 2000 or 2008. So keeping those views in mind, I still think that the impact of the printed money is yet to be seen, and it will pump the stock market on the higher side in the days to come. And this is what I think about S&P 500, Dow Jones, or the entire global economy. And then indeed we will see that there will be a collapse like 2008 in the near future. So these are my views on S&P and why I'm thinking that the big crash is yet to happen, and before that the stock market will go up. I hope you will find this video informative, and if you indeed like it, please like and share my video, and Share your thoughts on the comment section, and please subscribe my channel. Lastly, take care of your family and friends. Thank you.